Welcome out to another Trading Justice podcast. It was quite the day on Friday, historic type of price action. We got a big earnings season ahead of really favorable seasonal time period for the bulls. A lot to discuss. We'll break it all down in in a concise manner. There's a lot going on. But before we do that, I want to tell my brother happy birthday. I got him a Ricky Henderson rookie card for his birthday today.
It honestly made my day. It's my favorite birthday present in a while, not just this one. I love Ricky Henderson. He's my favorite baseball player growing up. I worshipped him as a young man growing up, loving baseball. Ricky Doe, love him. Saw the card. Thank you very much.
I sent Matt a picture of it in its case just so he knew it was real, because I would,
I was excited. My first thought, because I got you something for your birthday, and I said, "Did you get me a Dan Marino rookie card?"
I was literally saying that.
I was totally joking. I was totally joking.
He was joking, and I was like, no, but I came close.
I was totally joking, and you did come close. Nobody can beat a Dan Marino like Dan Marino. Like, that's just a different level. But Ricky, there's a competition for number 2, and Ricky's in there.
Yeah, absolutely. And listen, it's also beautiful, a course that you've been working on for almost 20 years. Might not be 20, but it's 16, 17, 18. It's been a long time. It is a foundational course on how to teach people to trade. Matt has literally been working on it, refining it over the years, and he will be teaching it next week. It is something that if you are a pro member in our community, just attend. It is worth the time, unless you are a maestro of the charts. Right, it's worthy of your time. And if you are not a pro member, it is a good time to become one. Sign up in the link below. Sign up for Master Trader. Tell us a little bit about it, and then let's get into this market talk.
It's one of my favorite classes to teach. I love it. It's the foundation of tackle trading in every aspect, whether you're learning how to cash flow, or whether you're learning how to do boomerangs, or whether you're learning how to scalp futures, or day trade, or swing trade, or position trade, or invest. It's the starting point of absolutely everything. Mark, I just started working one-on-one with one of our students in coaching. And in our first session, it's kind of just introducing each other and kind of getting the lay of the land and figuring out what you want to work on and what you want to work to and what you want to get out of it. And so I'm doing this whole interview process in our first session, and I'm like, well, what do you want to really kind of focus on in coaching? And they're like, I want to really focus on day trading, and I want to get really good at day trading. And I said, okay, tell me a little bit about your experience. Have you ever day traded? Nope. I'm like, all right, fantastic. That's not a bad thing. And I said, how good are you at the technical side? And they're like, yeah, I could use some work. And I said, okay, obviously we're going to be talking technicals in coaching, but I want you to start in Master Trader. And Mark, about 6 months ago, I coached somebody and they wanted to just focus on Tackle 25 and covered calls. And guess where I started them? Yep. Master Trader. Because regardless of what systems you work on and what systems in trading you want to really perfect, whether it's directional volatility or quite frankly cash flow systems, you got to learn how to read a chart. You got to learn how to identify trends, patterns, support, resistance, and identify how to learn how to do projection analysis. Because even in a covered call, Mark, you got to learn how to project stock, because you might have to make some decisions. And so Master Trader, I love the class, and I know our community does as well, as we've had people literally attend Master Trader more than 25 times, because they tell me they get something new out of it every single time. And so if you are new to tackle trading, hit that link in the description below. Come join me in Master Trader next Monday and Tuesday, 6 p.m. Eastern Standard Time, both days, 2 sessions. You're going to love it. And there's an on-demand. So it's worth its price of admission, I can guarantee you, since you can get there for free. The only risk you have is your time spent hanging out with me. It's going to be fun. Come join me. Hit the link.
Yeah, listen, it is going to be fun. Friday wasn't fun, though. We'll see.
No, it was not.
Friday earnings season was fun, but Friday was not. Listen, and let's be blunt. Friday was terrible, and it was unexpected. We started the day pretty calm waters. I mean, I was looking at the open on a Friday, and I was like, oh, we're really good. And then you started seeing the barrage of 5-minute candlesticks. I live on a 5-minute chart on intraday during the course of the day, unless I need to do something else. And it's like, oh, there's news going on. Those I know those are not normal 5-minute candles. And some things were occurring where President Trump was basically going off on China, in his Truth Social feed, basically saying that
He
China's
didn't
not
like what
doing,
they were doing with rare earth.
did not like what they were doing, and said there's going to be consequence. And Matt, after that, it kind of took a life of its own
Yeah.
on the intraday charts, didn't it?
Yeah, I did. And the thing about the technical condition market, that news legitimately came out of nowhere. The market on Friday morning had started out the exact same way we'd navigated last week. If you'll recall back to a week and a half ago's newsletter, I said, okay, this week we're looking at a 4 hour high base. That was kind of the analysis going into last week. And when you look at the analysis, that was kind of a good call, Mark. I mean, honestly, all week long, look at that consolidation at the top end of the chart, up to 6,800 back down, up to 6,800 back down, up to 6,800 back down. And that's kind of what that high base was. And so, Friday on the actual cash open, market actually went up. A lot of people think the market went down on just from the word go. It didn't. It actually went up and was testing the all-time high on the intraday side of the equation. And I'll tell you right now, it caught me out. It caught me off guard because I was tracking a bullish retracement on the intraday chart, and I was looking to make a trade, and all of a sudden it just got wiped out, Chucky. Like it just got boom. And once that, I mean, you could see it easily on a 15-minute candle, but the market didn't wait. Look at the 1 minute candle here. Violated everything on the intraday side on the 1 minute candle. And you knew from that point, you didn't know what the news was, but you knew something had
Yeah.
occurred. And man, stops got hunted, bloodbaths ensued, volatility poured out. And when we're talking about stocks, like it was bad in the stock market on Friday. It didn't hold a candle in the wind to what compared to what happened in some of the crypto spaces.
Yeah,
Man,
man, and tell me, because this is one of the things that, unless you are, absorbed like you often are in multiple areas of communication, right? Like, active watching social media, you might have lost this part of the story, Matt. The red candle was historic and bad on the S&P, but it does not tell the carnage that was out there in some other markets, does it?
no, it doesn't. And it honestly reminded me of what happened on January 15th of 2015 when the Swiss depegged from the euro. And we saw a lot of volatility in the ES that day. But if you weren't specifically looking at the euro dollar, or excuse me, the euro Swiss cross pair, or the Japanese Swiss cross pair, or the US dollar Swiss cross pair, or major pair, you didn't understand the damage of what actually transpired. Because on that day, Mark, it is not a day that lives in infamy in the United States stock market, but it does in the currency market because forex brokers went belly up that day. Forex traders got wiped out that day. I knew forex traders that never once again traded after that day because that's how bad. If they got caught on the opposite end of the volatility, you got wiped out when a 30% move against the dollar occurred. And so it reminded me a little bit of that day where the damage in the S&P 500 was bad enough for us just to talk about it in and of itself. But if you go look at some of the crypto spaces, Mark, there were no bid environments, meaning the value of an altcoin was immediately went to zero and people using leverage were completely wiped out. And so there was like I said, it was bad enough in the ES, the NQ, the United States stock market, but what happened in the crypto space, the rug got pulled in the crypto space, and like people that were leveraged, which obviously a lot of people use leverage in crypto, come to tackle trading. Please, we'll teach you how to properly position size because there were a lot of mistakes to go to the point where you have a maxed out portfolio one minute, the next minute you're now zero. That's not just the rug pull. You got some responsibility in that because of position sizing and so on and so forth. That's kind of a little bit of degenerate gamble. I don't want to stomp on them right now because obviously they got beat up on Friday. But the pain was real there, Mark. There's no doubt
The
about
pain
that.
was
And,
real.
and, and it's going to take a little bit of time to recover. And honestly, one of my biggest questions in this entire saga was not the timing of the post, Although I'll never understand the timing of the post. Friday, the market just opens, and we're just gonna throw out a tweet to send shockwaves through the entire financial system without thinking how it's going to impact policy in any capacity. Like I have a lot of criticisms for that post. There's no doubt about that. I thought the timing was unconscionable, quite frankly. It didn't. At no point did the financial markets ever come into the purview of what was happening on Friday. And I also want to understand who took the open short position against shorting crypto to kind of light a fire and a spark to the crypto bloodbath and the liquidity event that happened 30 minutes before that post got released. And I also want to understand who bought the dip on Friday, knowing full well that there was going to be an alleviation event on Saturday. These are open questions that we're not going to go into detail in this podcast, but I certainly want to know the answers to these questions because I have questions. I think the market deserves answers on what transpired on Friday, and we'll have to wait and see on getting any answers on that. But once that post came out and it spooked the market of a rinse and repeat of tariffs on China, 100% on top of anything else they're going to do, obviously the market was in puke mode. There's no doubt about that. There was not a bid to be seen, and quite frankly, the technical damage was quick and it was filthy.
Yeah, no, and just some real, one of the things that I would like to like, in another setting, just talk about, some of the human stories of that, just from a personal standpoint. We don't have time to go
And we
into
can
it,
get
but
into it down the road a little bit,
yeah,
but
yeah, but I, advise to look at it. It was, if there was nefarious things behind it, they should be held responsible. They should be held responsible.
there's too much smoke to not have some degree of fire there. A multi-million dollar position shorting crypto was opened 30 minutes before the event. And the first trade is a multi-million dollar maxed out short position against crypto against a bullish uptrend.
Yes.
Yeah. I would like to remove the word if. That's it. That's all. That's all I would like to do.
you know and always, as always with markets, what comes next, right? From a technical, from a big picture, and in conversations with you, Matt, there's two things that have stood out to me in the conversations, because obviously after an event like this, you and I are going to talk a lot, in these
Mhm.
type of things about what it means. And two of the takes you've had are really interesting, and both of them deal with, like, listen, if you do not get a positive earnings season, if you do not get something to get excited about, and we'll talk about earnings season here in a second,
Mhm.
there could be some lasting damage, and we don't have resolution on China itself. And this was kind of a confidence shaker, knowing that these kind of days can come out of the whim on nowhere, right? Will you just expand on those thoughts a little bit?
Yeah, I think there's two thoughts that I have. Number one was as we were navigating last week, technically, the market behaved at 6,800 very consistently throughout the week.
Mm-hmm.
And when you see that, Mark, it's the market trying to tell you something. Like every day for 5 consecutive days, we went to 6,800 and came right back down. 6,800 came right back down. 6,800 come right back. 68, 68, 68 come right back down. The market's telling you it's not ready for prime time. And so as we were navigating last week, the more it happened last week, the more I was thinking, this thing's just not going to break in front of earnings. Like it's just not going to break in front of earnings. It's not going to run in front of earnings. Like early last week, you certainly could have broke 6,800 and ran because you got enough time to go in between that and JP Morgan's kickstart, which is tomorrow officially. But as you were going into the end of the week, it just in the back of my head, I started thinking like, this is most likely going to take an earnings catalyst. This is most likely going to take a catalyst, and the only catalyst that can come is either the government reopening, which is not happening. I mean, Mark, these dudes on Capitol Hill in Washington, they're not even talking yet. They're not even having a conversation. They're not even negotiating in any capacity. Hakeem Jeffries was asked on, I believe it was MSNBC today, but don't quote me on that. I just saw it on Twitter, but I do believe he said, quote, the president hasn't even authorized Johnson to negotiate for the Republicans. And until that happens, you're not getting any catalyst. And I do think there's a general philosophy that once the market reopened, not the market, but once the government reopened, you were going to get a sizable event, and that could have broken that 6,800 zone. But you're but as the week went on last week, you were just not getting that. These dudes weren't even talking. They're still not talking. Like, I think the over under right now for the government reopening is 36 days, which is further than the record of the government shutdowns. And so it's not going to come from the government reopening. And so I kept thinking, okay, where's those catalysts going to come from? They ain't going to come from an economic report. Government shut down. We're not getting any economic reports. There's a void of information that the market is used to in these environments. And so right around the corner is earnings season. And so, yeah, I do think, coming to the second point is this is going to turn into a very important earnings conversation. And I do think earnings season is important in general. But there's times earnings season takes on a bigger
this is one of
context.
them. And this is one of them for me for all those reasons. Listen, and we talked about this last week. I think the Bulls have a decent case moving forward, right? There's, assuming there's things don't self-sabotage it, and ruin it. That's why you pay attention to the narratives. But, we're heading into a seasonal backdrop where you can have a positive thing. And earnings has been such a foundational thing coming off last quarter. And Matt, I said this last week. I'll say it next week. I'll say it this week. There were some negative stories that happened this quarter, right? And there was endless nitpicking at the AI narrative. I mean, we've seen that recently with some of the, like the open AI, what they're doing with some hasn't been well received in some parts of the investing community. But there were, at least a dozen other
I'll
minor
tell you right
stories.
now, if I see another headline that's just OpenAI pledging future revenue for some type of, you know, capital allocation, I'll be like, "Ugh, OpenAI, you're starting to feel like pets.com, bro."
Yeah, that I did not see that comparison coming. You may be the first person to compare OpenAI to Pets.com. Maybe
Uh,
literally.
I like Sam Altman. Obviously, I'm an AI dude, but how many hundreds of billions of dollars are you going to pledge before you make one?
Yeah. So no, but these are the kind of like little negative sentiment here and there. What kept the market grounded? You're looking at a chart from the last earnings to this one outside of Friday, which was, a little, self-imposed disaster. You saw in the midst of all of those negatives, and we had a really negative payroll. We had, unemployment. It was the backdrop of earnings, Matt, that
Yeah.
kept the market drifting upward. Uh, it puts extra
It's
emphasis when
hard to get too bearish when you know the earnings landscape.
and so these stories will tend to take care of themselves. But before we get into earnings, I just want to to gain confidence again, because usually as a credit trader, I just need some time.
Yeah.
Need some time after a volatility event, just from a technical perspective, to truly gain confidence. What would you need?
I have confidence in the 5 minute chart. I have confidence in the 15-minute chart. I have confidence in the 30-minute chart right now. I have confidence in the weekly chart. I have confidence in the monthly chart. I don't have confidence in the daily chart. And that's the problem technically for a lot of traders right now, because the daily chart is such an important time frame for so many different types of traders. I mean, the first charts everybody looks at is the daily chart, quite frankly. And so when volatility events happen, and I say this all the time, I feel like I'm a broken record sometimes on this stuff. But when volatility events happen and you violate support, you violate a trend, you violate a pattern, you violate something, and volatility ensues. It's like a literal dam breaking, and the flooding ensues. And it does a massive amount of damage. And in your head, you're like, oh my goodness, the end of everything is here, right? But then
Mhm.
as the water resides and you start to see the true nature of the damage, you can start to have an understanding of what needs to get rebuilt and what doesn't. Well, from a technical perspective, when volatility hits the trend, volatility is the kryptonite of all things technical analysis. And so you see the end of a trend, and I don't care if it's with a volatility punch on a tariff threat out of the president on Friday morning, or if it's a, key economic event, or if it's a carry trade unwinding. I don't care what sparks the volatility. When volatility is there and it ends the previous trend, you can't be in the frame of mind to be like, oh, but what about the previous poor trend? What about that? That trend's dead. That trend's over. Move on. And you have to understand one thing, how that daily chart gets rebuilt. It gets rebuilt with a little bit of time consolidation that allows the 5 minute to get consistent, allows the 15, 30, 1 hour, 4 hour that bleeds into the daily time frame. And so, yesterday I saw on Twitter, Mark, somebody was, well, not somebody, I saw it for the last 72 hours. Friday, all day Friday, the end of the world was happening. Everybody got stopped out. Everybody lost money. Everybody was complaining. Everybody was yelling into their Twitter or X or whatever that was. Right? They were using X as therapy over how much money they had lost on Friday. By Saturday, when they saw the alleviation coming out of the administration, they had all decided to tell everybody on Twitter that they actually bought the final dip on Friday. And so they're all recovered. For the rest of humanity, we need to make sure that these things get rebuilt because we're not out of the woods yet, Mark, technically. We're not just going to see a massive recovery and run. Like I said before, the market was struggling to break 6,800 without a theme. And all of a sudden we're going to inject a tariff negative theme, and we're just going to think, well, now it's going to break 6,800 and run, guys. Yeah, it wasn't breaking last week when we had no 100% tariff threat, but now that we have the alleviation of a hypothetical 100% tariff threat, we're going to break 6,800 and run. No, it's going to take a little bit of time to reconnect those dots, and as those dots get reconnected, you can start to see the consistency build out. For example, you're looking at a 15-minute chart. You can start to see pivot points. You can start to see an edge. You come out to the longer time frame. You start to see an edge. You start to come out to the hourly time frame. Guess what? You're starting to reclaim those very important moving averages. And so these things take a little bit of time to reconnect the dots on the technical side. But for me, it's absolutely outside of day trading. It's absolutely turning into an earnings conversation for me. We're one day away from J.P. Morgan Chase. This thing's not getting dialed in before a catalyst comes from the banks.
Yeah. Now, Matt, and so I want to talk about this earning. I think this is important, not for the next trade, but for the next 100 trades you might do the rest of the year. And it's
Listen, I think the
certainly
most important part of this conversation is if this earnings theme is still intact, Santa Claus coming to the fourth quarter rally.
all
If
right.
the
Okay.
earnings
You
theme is
just
not intact, we're not getting Santa Claus. That's how
and
important
there,
this
that
conversation is.
is the truth, right? If the earnings season is intact, we're going to end the year well. If it's not, now,
If
now
it's not, we won't remember. If the earnings
what
season is intact, we will forget about Friday's bloodbath fairly quickly. If it isn't, we're going to be reminded of Friday's bloodbath for a long time because we might
so
be staring at
walk
6,800
us
as the
through that.
all-time high for a month.
What are we looking for? And so I want to start one, like,
Yeah.
like what are we looking for? I'm going to throw out some just things that, as a consumer, I want to know. Like, what are we generally looking for? What's the bar heading into this earnings season? Right? What will a final number look like? In different things, and you're my guy, like 1,000 times more than earnings than I do, but I'll chime in. But like, where would you like to start on those? Like,
Uh, there's only one number that is the end all be all number above all other numbers in earnings analysis, and that is the blended EPS growth from a macro perspective. How good is earnings doing? Well, let's talk about EPS growth. What blended EPS growth is it's the combination of the forecasted EPS versus the actual EPS. And so right now, Mark, out of the S&P 500, we've had 23 companies report so far. Of those, which means we now have what 477 companies to go. So we have 477 expectations on EPS. We have 23 actual EPS numbers. What the blended growth does is it takes what is the expectation and then it blends into the number, the actual number that gets produced when the company reports its earnings, and then the blended EPS growth number, which tracks the totality of EPS in the S&P 500, will go up or down based on the actual number that came in and it was offset. So for example, if the blended EPS growth number was 1 and we were only looking at one company, right? And they reported an EPS was actually 1.5, the blended EPS number is now 1.5. And so it does that for all 500 stocks. Now, if you're asking me, what does the number have to be to have confidence in Santa Claus? I would say anything above 10% would give you some degree of confidence in Santa Claus coming to the financial world throughout the months of November and December. And the reason I say that is because, Mark, you and I like Major League. How many do you have to have a streak?
You got to have three.
Okay. We've had 3 consecutive quarters above double-digit growth. We've actually had 4 out of the last 5.
It's why the market has ignored so much that fact right there.
You can see it down here at the very bottom down here. Last quarter was 12% in total. The number before that was 13.3. The number before that was 18. The number before that was 7.8. So we've had 3 consecutive quarters above double-digit growth. And I feel like if we get another one above double-digit growth, like how does Santa Claus? I would like to ask the question: how does Santa Claus not come to the financial world if all year long we're dealing with double-digit growth?
It would take something special, in my opinion. Right? It's the foundation.
And so to achieve that, you have to understand where we're at right now, and what does it take to get to that final conclusion. And so where we're at right this very second, Mark, is that in the blended EPS growth, we are expecting right now 7.9% growth. Okay. Now, on June 30th, which was the end of the previous quarter, on June 30th, at the beginning point of Q3, which is now we're reporting for Q3 right now, the EPS growth number was 7.3. We've actually went up in expectations in the last 2.5 months. And that's pretty rare because we usually try to set the bar low, 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 low. EPS has actually went up in expectations. That's how strong the earnings environment has been, is that for the first time in a while, we'll talk about how long here in a second, EPS expectations actually went up in between earnings season. Now, when you think about EPS growth, how it works is this. We have the expectation, right? Expectation 7.9%. To start the season, it's 7.9%. Now, to achieve what we would consider the number necessary to continue the earnings landscape, meaning our confidence in earnings, right, would be 10%. You have to achieve 10% to hit that double-digit growth to continue the trend we've seen in double-digit growth, which means you need to get at least 2.1% growth from the expectation to the actual numbers. Does that make sense?
It does.
Okay. Now, Mark, I feel we're probably gonna be over 13% here by the end of the quarter. Now, how do I get to that 13%, and why am I a genius? The reason is really, really, really simple. The average EPS blended growth number right now is 7.9%. The average beat rate in the market currently is 78%, meaning of the 23 companies that have reported earnings, 78% of those companies have beat the expectation. That matches every 5 and 10 and 15 and 20 year time frame you can get. We always get high 70s to beat the EPS. And the average beat in the last 5 to 10 years at the low point is 5% and at the top point is 8%. So if we, on average, expect 7.9% EPS growth to start the quarter. And if you'll see right here on my screen, right here, Mark, on this chart, last quarter's beat rate was 7.6%. The quarter before that was 8.1%. The quarter before that, 7.3, 6.3. And we've seen a couple in the 1.3s, 2s, 3 and 1s, yeah, right? We've seen some low ones, but those were expectations. Like 22 was an earnings saga gone bad. I remember it very, very well. People will talk about inflation, but the inflation created an earnings contraction story where everybody was expecting an earnings recession type environment. Nobody's expecting that right now. We have an expectation at 7.9%, and we have a historical beat percentage between 5 and 8%. So let's say we come in at the low point on average over the last 5 to 10 years, Mark. You're even at that point, you're at 12%. Even at that point, 12, 13%. If you're going up, if we have a really, really, really good earnings season, we could snip 15 and a half on the EPS growth. And
Wow.
so the
Well,
market,
you'll have a narrative with a kicker.
and that's the thing about okay. After I got stopped out of 5 swing trades on Friday, thank you, Mr. Market. After that occurred, I'm like, okay, I can either be really, really, really pissed off and complain and yell about it, or I can just think about how this is gonna impact the future. And that was when I was like, okay, this is just a day trading conversation for me right now, but I am laser focused on earnings because I felt like the market was having a hard time breaking 6,800 and running with in front of earnings by the end of last week. That's kind of where I got. And now we're one day away from earnings season and we're coming from the lower point on the chart. I think there's opportunities in earnings season here. And so I obviously believe it's going to take a couple days to settle down kind of the entire volatility here. But again, if the only number you look at, and I could go on a lot of different numbers in earnings, Mark, legitimately, we could have this conversation in 14 different ways on earnings. But if there's one number that you focus on to understand the earnings totality theme, it is the blended EPS growth number. As long as that's improving throughout earnings season, we're on track to have a good earnings season. And as the numbers are established right now, expecting 7.9% EPS growth with an average beat of 5 to 8% over the last 5 to 10 years, we should snip between 13 and 15% growth this quarter. And if that occurs, I just kind of feel that's 4 consecutive quarters over the last 4 quarters. Kind of feel like Santa wants to come visit a little bit.
Yeah, no, yeah, it's going to be really hard. I don't care, especially after Friday's shakeout a little bit, which kind of took a little bit of the excess out of the market.
Like you did not know that our blended growth was most likely going to get into the double digits, right?
Yeah, no, like there were a couple, and
There were some hints out there, but
you might have even audibly heard me a couple times while you were talking,
I
Dean,
did.
like when you
That's
threw
why I
out
want to ask.
numbers, because
So
when
now
I
that you
heard these
think we're
numbers,
going to get into the 13,
listen, I know enough about earnings to know what the numbers mean, right? And when I heard 13 and then you said a 15, I started to literally think about how I wanted to position breakouts and how aggressively I wanted to play when they technically occur, because that will be a mega narrative to head into a very seasonal period of the year.
if we can double digit going into Mag 7 week, like if we're at 10% going into Mag 7 week, we're going to get 16%, Mark. I feel like we're gonna know a lot in the next 10 days, like a lot. And I think a lot of those answers, quite frankly, will be answered this week because it's not just like in a normal earnings season, we get about 7 S&P 500 companies reporting in the first week. This week we get 36. And so it's like a quick start to earnings. And so I don't think it's going to be too much lag between the start to earnings before we understand the totality of themes that come out of earnings season.
Yeah, I know. Listen, looking forward to it. And obviously, we will give updates every week on the podcast and then live during the course of the week with our pro community, just on what the numbers, right?
Yeah,
Who's winning,
a
where the
couple
numbers.
other numbers very quickly.
Oh, yeah.
just EPS blended growth is the epicenter of the macro conversation. Definitely track that, and I write about it every week in the Tackle newsletter as well. I give an earnings update every week in the Tackle newsletter when we're in earnings season. So yet another reason why to anchor against the Tackle Trade newsletter. Have I mentioned the best newsletter in the business? Couple points outside of just the blended EPS growth number. First and foremost, we are also starting this earnings season on a high note, valuation wise, and that's not necessarily a great thing. We're pretty stretched on the valuation side of the equation right now. And that's to be the like
That's
last
why
week.
earnings better. Basically, earnings
Earnings
better
better
deliver.
come through. Yes, yes, yes. That 13% that we think we're going to get, yeah, we better get it
We
type.
better get it.
We better get it. Mark, only three areas of the market are higher valued than the actual S&P 500 itself. Technology has the highest forward P ratio of 31, discretionary right underneath that at 29. Energy at 15, finance at 16, healthcare 17, real estate 17, utilities 19, and so on and so forth. But the S&P is about 2 points above where the 5-10 year average is. And so in all capacities, we're a little bit stretched as we come into earnings season. And so once again, and by the way, we've been slightly stretched in valuation for 2.5 straight years. So this is not a new conversation. It's just an ongoing continuation of that conversation. But without us hitting, this is the risk, in my opinion, Mark. If we don't get that good earnings season like we've had in the last three, if we don't get that 6.8% blended growth number on top of the 7.9 expectation and sniff into 14. Let's say we have a bad earnings season. We only come into 75% beats. For a layman out there, you'd be like, that's bad. Yeah, in earnings season it is, when they lower the bar for everybody to cross it easily. 75% beat, and we get one of those quarters like in 22, Mark, where we only get 1.3% add on the blended growth. Well, you're dealing with high valuation there. And the market might want to fix something if that occurs. And the thing that it might want to fix is the PE ratio of the market. And it wouldn't be from an earnings perspective, because earnings would be in the rearview mirror, would be from a price. And so I kind of feel like this earnings season is a really, really important one. Not only from a timing, being the fourth quarter, going into the fourth quarter, which is usually a really, really good seasonality environment for the bulls. Not only because of that, but because we're coming out of some volatility that I think awakened people in the market to what could transpire. I think we'd forgotten that in the last 6 months, what can transpire out of those situations. And so I do think it woke that up a little bit. And so I think it's one of the more important earnings seasons as over the course of the last year. Not of all time, but over the last year. On the guidance side of the equation, we've had 55 positive guidance reports. We've had 57 negative ones. Pretty abnormal, honestly, because we usually have quite a bit more negative guidance than we do on positive guidance. Just a couple points on the sector side of the equation. There's really only two sectors that have had negative guidance in general, and that's energy and utilities. Those are the two sectors that have had negative guidance. Healthcare, massive positive on the guidance side of the equation. Infotech, always good. Real estate doing pretty good as well. But not a little abnormal seeing positive and negative guidance reports be fairly equal. And then on the actual landscape itself this week, tomorrow's the official kickstart to earnings. That's with JP Morgan. I'm going to give one name each day that you have to be waiting on, that you have to anchor to. That has to be JP Morgan tomorrow. A close second would be Goldman Sachs. But JP Morgan is the epicenter of the banking industry. They are the catalyst. They set the stage. If JP Morgan hits a double tomorrow, we're having a good earnings season. That's the importance of JP Morgan. On Wednesday, you got to be looking at ASML. ASML is a major, major, major catalyst stock within the
Assuming they don't release
tech
their
space.
earnings report early, I
Okay.
will never
On
let.
Tuesday night, we're getting ASML. A little joke, they've done that before. But as long as they don't do that, ASML catalyst stock out of the tech space and the AI space specifically on Wednesday, that will not last long until we get to Thursday's Taiwan Semiconductor, which is a vitally important company, obviously. And then on Friday, Ally Financial. Sneakily an important one, Tackle 25 stock. Schlumberger, first energy stock to report earnings this quarter. Schlumberger also a Tackle 25 stock. They both report on Friday. So the five earnings reports as follows. I'd say JP Morgan, ASML, Taiwan Semiconductor, Ally Financial, and Schlumberger. Those are the best, most important reports this week. We'll track them all at Tackle, and we'll talk about them in the Traders Lounge every single day this week.
Yeah, listen, that transitions us into stock it or drop it. And I got a different twist on the game this week, Matt. Got a
Oh,
little bit of a different twist, right? I got five stocks, all have earnings this week. You mentioned all of them. And
oh,
I want you to stock it or drop it ahead of earnings. You don't get another earnings. You don't get to use your big brain. You got to stock it or drop it
geez.
ahead of earnings
Cheating.
right now.
All right. So would I buy a call option in front of earnings or would I buy a put option? I
Or
wouldn't buy
if
them
you
either
owned
because
it,
volatility sucks on
or if
earnings.
you
But
owned it from a long term, would you do anything defensive or let it be, right? Maybe there's a way.
stock it is good, drop it is bad. Everybody knows the game. Let's go.
JP Morgan, let's start it off. We're going to go chronologically on this one.
hmm Um,
JP Morgan,
JP
stock
Morgan.
it or drop it.
I think you have to stock this one. Again, if you think we're going to have a good earnings season, JP Morgan's going to be a catalyst. JP Morgan's one of the most important companies in the financial space. Finance goes as JP Morgan goes, and JP Morgan hasn't broken down underneath the 90 EMA since last week, but last week was the first time since the recovery began. And by the way, that's just a pullback on the weekly chart. I think you got to stock JP Morgan. They're one of the most important companies in the financial space. They wouldn't be Bank of America for me, but you got to stock them nonetheless.
All right. Listen, next in line is that company that I'll never quite forgive, ASML. Because of the market, it caused me to lose money that day. You leave a bad, taste in your mouth. Quite the trend on ASML, important place in the
Um,
semiconductor industry, broaching all-time highs after, basically battling support zone for a month or seven. Stock it or drop it, ASML.
uh, sneakily one of the more important companies in the equipment space in the semiconductor space. You got obviously two tackle 25 juggernauts there. Applied Materials, and I'm bringing them up just to show you the space because the space doing the exact same thing as ASML, and a tackle darling at this point, which is weird because it's only been on the list for a year, but there's a lot of love for old Lamb Research and old tackle trading. I can tell you that right now. Maybe that's because a lot of those dudes and gals picked up the reversal as it was playing out earlier this year. But I just think you got to drop it. I mean, to it you deal with international companies in the semiconductor equipment space, but when you have very similar companies that do a very similar thing, like Lam Research or Applied Materials, I don't think you have to take on the ASML and whatnot. So it'll be a drop it for me on ASML. And yes, some of that is their shenanigans they played with earnings last year.
All right. Next in
But
line,
mostly they just will never sniff Applied Materials and Lam Research.
Taiwan. Very much a unique company. The importance to the AI space cannot be understated. A big moment early on, right? Like how you have a football game
Yeah.
and the announcer's like, hey, this is a big moment early on in the game, right?
This is it.
And
This is it.
this is
Taiwan's
it. But
going to
this
be
is
that
this is
catalyst.
that
Yeah.
sports analogy. This is a big moment early in the game, right?
I stock it. It's Taiwan Semiconductor. They are they're a tier two AI gold rush stock, right on the cusp of tier one. But the only question I would have going into it is that we're stretched here on a lot of time frames on both ASML and semiconductors in general. You look at the daily chart, pretty overextended here. RSI doesn't show that because of the 1 day retracement, which again might just be a thing. But the weekly chart is slightly extended here as well. And so just from a strategy perspective, you might see a little bit of a gap on, unless they blow it out of the water. I would say pretty high bar to expectations here. But you got to stock it. It's Taiwan Semiconductor.
All right, next Friday morning, Ally, stock it or drop it, Ally.
You're just pulling up a whole bunch of ones that I enjoy here, Jackie.
I mean, I looked at what I thought you might think were the more
They're the
important.
important stocks. They're the important stocks in the financial space. If you're looking for a directional darling, you can do far better than Ally Financial right now. It's a volatile little nightmare right now. Now, volatile nightmare also means over a 3 week stretch it moves 10%. Right? This is a good covered call stock. It's a very good covered call stock. And if you're looking for covered calls in the financial space, like Ally Financial is a good one to go to. So I will stock it for cash flow purposes only. Direction, it has some current challenges that it is undertaking. I will say that on the directional side, a W here off the 200-day moving average would look sexy as get all out going into earnings season. And so, yeah, stock it for two purposes now. Let's see the 200-day moving average test here going into earnings, and it's a great cash flow company.
All right, Schlumberger, finish it off with a little energy. Hopefully the market has some energy by the time it does.
Listen, if you own this stock, you're riding covered calls, and this is a big moment for Schlumberger. It's very similar to Ally Financial in the sense that Ally is a good stock in finance for covered calls. Schlumberger is a really good stock in energy for covered calls. But man, you got an important test here going into earnings later on this week, Mark. You're sitting at supports. You're hanging by a thread. The fundamental condition of the energy space is not good. You've had 3 downgrades, no upgrades on guidance. You've had, I think the only sector in the market which is expecting negative revenue is the energy sector. I'm not looking to do much here. I love Schlumberger. They're most likely going to continue to be a cash flow stock, but that's the only reason I would stock it. Outside of that, it would be dropped.
All right, listen, bro. I've enjoyed the podcast. Maybe not as much as you will enjoy your Ricky Henderson rookie card.
I do. I'm looking forward to the Ricky.
And I gotta listen. I gotta tell you this story. I think it's an interesting story. On the podcast. So I go down to visit my brother Chris this morning, and there was this old safe that I used to store baseball cards in, and he had for 25 years had not known the combination. So Matt, for this,
Chris sat in that office not knowing how to open Dad's safe for years.
It's a really cool safe. It's like this old antique one. But for this birthday present to occur, I had to visit Chris today, which was random on your birthday. Mm-hmm. I had to remember a really complicated safe number from 25 years ago, which I don't know how you
remembered that.
I did, and my self had to have put a Ricky Henderson amongst a few cards in that safe 25 years ago and just forgotten about it. For all of that to transpire, happy birthday, bro. I hope you enjoy. You do a great thing for this community. You are a great leader of this community. Happy birthday.
Really appreciate that. Yes, Mark, that made my day. I love Ricky Henderson. If you guys enjoyed the podcast, best way to support the podcast, give us a nice little like and share on whatever platform you're watching it on. Tell somebody about it. Get the good word of trading justice into the ears and minds of everybody else out there as well. And don't sleep on Master Trader. If you're looking for an amazing class, technical analysis to kickstart your trading, to really shore up your technical read, come join us in Master Trader next Monday and Tuesday. You can get access to it in the link in the description below. You will not regret it. You'll have a tremendous amount of fun. You're going to enjoy it. You're going to learn a tremendous amount. And at the end of the day, you're going to increase your financial IQ, and that will be time well spent. And so come join me next Monday and Tuesday, 6 p.m. Eastern Standard Time in Master Trader. And with that said, I hope everybody truly has a blessed day and rest of your week. And if you need anything anything from us at Tackle Trading, you can always hit us up at team@tackletrading.com, or you can hit us up in our Tackle Trading Discord channel, which you can also get access to in the description below. Have a wonderful day, and hit that like and share on your way out the door.
Listen, everyone, take care. Have a great week, everyone.